All right, welcome. This is February 1st. Wow. Thank you for joining us. This is the PUG meeting, that's Person's User Group. Normally we have a little bit of a PowerPoint up there and all that good stuff, but in the excitement of the month and excitement of trading and an excitement of the room and everything else going on with the Fed today, and an exciting day for us, at least for the community at Person's Planet. Live trade room, having positions on, and again, the newsletter and the advisory service and JPAM and everything else that we got going on. It was an exciting week, and hopefully many of you were a part of that. And but with all that said, I had completely absent-mindedly was not even completely remembering that there was a PUG meeting tonight. So in the spirit of being a professional, and if you made the time to come visit us, I figured I would make the time instead of rescheduling, that we would get right to it. We do have questions. They're in hand. And I want to thank George V, excuse me, without giving anonymity away. I wanted to thank George V because if it wasn't for George at the end of the day today saying, hey, you got a PUG meeting today? I would have forgot all about it. We had some exciting stuff. And, because of George, we're going to go right in with his question, which there's several different questions. It's almost like your question, George, is pretty much your question is more like a trading class, but I'll go through the steps because it's what we do in the live room almost every day, and what I do in the newsletter. And so I think it's a good question that you've asked, and so I will definitely reciprocate with a good answer. All right, so the question is, can John explain if there are a set number of steps in my process to determine the condition of the market? What are the steps? And in which order of importance are the indicators reviewed? When, during the day or night, is the review done? Are adjustments done throughout the day? Absolutely. Daily, weekly, monthly, depends on the time frame. So let's take first question. Can John explain if there are a set number of steps in his process? Well, the first thing I do, let's just take Thinkorswim. At the end of the day, we run scans. At the end of the week, I run scans. At the end of the month, I run scans. What are scans? Scans could be used on several different platforms using my indicators. The scans that I use, I'm searching for high close, low close dojis, which is a bullish or bearish. High close is a bullish setup. Low close is a bearish setup. I look for, at the end of the day, we run through what generated bullish buy signals and what generated bearish buy signals. And we go through those, as you'll find out, as we did today. In fact, I'll share that. So the first thing I do at the end of the month, because that was yesterday, end of the month. And I'll give you a kind of a list of how I filter out a lot of those scans. So let's start with top-down approach, shall we? First, top-down approach. What is top-down approach? Take an index and start there. That's the top dog, the index itself. Understanding what's contained in the index and what stocks are weighted to affect the price valuation of that underlying indice. So first and foremost, we have the SPY. SPY has about 32% of its cap weight to technology. Then you have financials, then you have transportation, you have energy, et cetera, et cetera. There's 11 sectors that divide up into the S&P 500: materials, industrials, transportation, utilities, technology. With the Qs, well, it's 100 stocks, and it's more cap weighted towards technology, but it has a couple unique little numbers in there. Some retail stocks, like a small company called Starbucks, another small little outlet company called Costco's in the Qs. And then we look at the Dow Jones Industrial Average, which, quite frankly, no one else does, because if you look at volume trends in options, nobody trades the diamonds. The next is the Russell, the IWM, and that's small cap growth stocks. I do look at the NASDAQ Composite Index only to confirm if there is volume and setups and trend signals, which would be based off a PPS signal. So what you see is TradeStation in front of you. I'm going to look at the, we're going to start with the Russell, because the Russell was one that gave us the first clue, the sign of what's on your screen here is, I broke down back in 2000 and it was actually 2009. It was November 2009 at the Traders Expo in Las Vegas. I asked Pete Killman from Genesis Financial, and we still use Genesis to this day, and that's off in a different room. I asked Pete, I said, hey, listen, everyone's using, and I like looking at the advanced decline. We look at the tick, the trend. These are indicators that measure what we call the breadth of the market, advancers versus decliners. But, you know, there's been some really strange anomalies that have happened, and that, you know, we use the NYSE, the New York Stock Exchange Composite Index, which has like 1,900 stocks, whatever it is, and 1,870 something. So I forgot the actual number. I apologize for that inaccuracy. But rounding up on average is like 1,900 stocks in the NYSE. I don't trade the NYSE, nor does anyone else, because it's just an index. So is there some way that we could get the data and make an advanced decline of what I do trade, which is the S&P 500? He says, well, why would you do that? And I explained to him. He says, yeah, we have the data. I could do it. So he did. He built it for me, and we put it into Genesis Financial. So translate that. I ended up turning over to TradeStation. TradeStation had the advancers on the Russells already. TradeStation already had the decliners. We just built an advanced decline comparative ratio line on the Russell, the IWM. And that's what you see here. So when you ask me top-down approach, the first thing I do is I look at the indexes. And when I look at the indexes, I'm looking at the advanced decline or the participation level and the trend of that participation level. And that would be as measured by the advanced decline. George, you were in the trading room this week, last week, this whole month. You know that this is the #1 go-to big toe Sergeant Hulka in the movie Stripes that I use. We've been bullish this market. We've been buying this market. And this has been the tool that we've been using day in and day out. Down below is on balance volume. Now, I'm going to go and do something, and I'm going to go to the studies. I'm going to edit the studies. And I didn't insert it here. So let's go to studies. Let's add a study. Add a study. Add a study. And I'm going to add something right here. Volume indicator. Oh, I didn't want to do that right now. All right. So let's go back, and we're going to edit studies. It's in a different page. Here's the window. We're going to go to the volume indicator. I'm going to customize it. Subgraph 1, 2, 3, 4, 5, 6, 7. Let's make volume indicator 8 and hit OK and close. All right. So what indicators do we have here? First, we've got the price chart of the Russell with a 20-period moving average. I've always used either a 19 or a 20. Bollinger Band, middle band's 20. What is a 20-period moving average? This is a simple moving average based on the close. 20 period. What does 20 period represent? Pretty much 4 weeks a month in the market. Okay. So I only use it as a guide reference to help filter out if price is going down, is it breaking below, and is a trend, the monthly trend going down? And there it is. Also, a lot of people look at the 20-period Bollinger Band and they look for breakout. So if my indicator, the last known buy signal, was over here, but when we get an increase in advanced decline on an increase in volume, that tells me we should not be selling the market. We should be looking for buying opportunities. And since approximately one of the things that I put out is a proprietary indicator with a set of moving averages, and this is one that I use consistently. And I talk about the yellow versus the blue line. That's a short-term moving average. That's a higher time moving average. When the yellow moving average crosses over the blue, it's a bullish bias buy signal. When the yellow crosses back below the blue line, it's a sell signal. That means that more stocks are selling off that are going up. And the ratio of more stocks going down than up is not good if you're long the market. So this gives me the condition of the market, breadth, the condition of the market. The more the merrier, the less the worse. So in other words, the more stocks that go up within an index, it shows there's better participation. It's not one or two or five names or one sector or one group of stocks that are causing the index to go up. If the heads of the five families, Amazon, Apple, Meta, Google, Netflix, if they're the only ones going up and the rest of the stock market's going down, that's not bullish. That's cap-weighted effect in the market, and it's not a very bullish sign. The more stocks that go up, the better it is for the index, and the more confidence you have that there's more money pouring into the market, slowly, subtly, and yet steadily, money flow coming into the market. So the next indicator that we have to work with on a general public usage would be on balance volume. It's not a perfect indicator, but it's better than nothing, and it's better than volume histogram. And I look for trends of volume, and we talked about this too, George. Higher high, higher low in volume accumulation is a positive thing. One of our members this week, even in the live room, says, Johnny, you sure this is buying or is it short covering? I think today's answer, if you didn't believe my answer the other day, then maybe you believe the answer that the market gave you. That's not short covering. That was fresh buying coming into the market. This is a proprietary volume indicator. It's a momentum volume indicator based not on absolute volume net changes like OBV uses, but on a percent change of volume. And it gives us a better sign or clue of what the momentum of the volume is and what the volume trend is. So I look at several key indicators from a top-down approach. The Russell was breaking out relative to older highs, and the rule of thumb is, as a lesson of trading, if we're expecting a market to go down, the last thing anyone will do is to buy growth, non-dividend yielding stocks. When people are buying growth stocks, and that's what led this rally earlier this week and last week, the Russell was the one that broke out ahead of time, and we were on that trade this week based on these indicators. So you were here as asking a question based on the work that we did live and in real time that helped us to prognosticate, profit, put out trade recommendations, put on trades, and be long and participate in this rally this week. End of story. When we looked at the Russell, we also identified, listen, the Russell could be a leading indicator for the other two indices, and that's why we were more bullish on the NASDAQ 100, which I'll bring over here. And that belongs back. I shouldn't have been able to move it, but TradeStation does allow things to go wrong every once in a while. Same story, advancers, decliners, and cumulative ratio line, volume. The Qs look almost very similar in nature, in pattern, that the Russell does as the indicators are lining up. Volume trend was been relatively light over the last week and a half, but the advanced decline broke out to newer recent highs. And it was on balance volume, which was slowly and steadily starting to increase. The clue was that the Russell was leading the overall market. So I use advanced decline. The last indicator down here is what we created based off Sherman McClellan's work. It's the McClellan oscillator. However, Sherman McClellan and his wife Marion created this indicator back in the 70s to reflect the data from the NYSE. Nobody trades the NYSE. The NYSE is an index itself. And since we break down, and in this society and civilization and culture now where we have Facebook and we have Amazon, we have cap-weighted effects and Microsoft and energy stocks and high dividend yielding stocks, and it's just a big hodgepodge of sector rotational switching of where money flows are going. We need to be more efficient in our collecting of our data and information. And that's why I break down where's the strength in the money flow and what is the condition of the market. And so that's the indicators that we look at, and the number of steps is I look at the top-down approaches. The first thing I do is I look at this advanced decline page and I say, what's the stronger looking index, and knowing what is contained within that index as far as stock segments, and such as there's less financials, if any, in the NASDAQ 100 and mostly in the SPY. If you notice on this screen, I don't even have the NYSE, the New York Stock Exchange Composite Index, because I don't trade it. It's information I do not need. If I'm looking at dividend yielding stocks, I have the diamonds right here, the Dow. If I'm trading NASDAQ related stocks, I have the Qs right here. I don't really trust or watch the NASDAQ composite much. This is a broader based technology sector, small cap index that the advanced decline can be skewed because stocks get added and subtracted almost on a daily basis. Someone comes in, someone comes out. Someone gets listed, someone gets delisted. And it's a rotating kind of rotational, I don't know, hodgepodge of stocks in there. So I look at it, but I don't trust it. You rarely will ever see me say, hey, look, the NASDAQ composite looks great. And I trust that. And I never say that. I look at it, but I give you the same speech day in, day out, week in, year out. It's there. I use it just to kind of use it as maybe a confirming, but it's not one of my best top looking segments of the market that I look at, George. All right. So as far as your question is determining market condition, the answer is when you start from the top and you look at all the stock indices, I look at the advanced decline comp ratio levels. I look at the McClellan oscillator. I look at the volume participation, and that's how I make my decisions on which sector looks best or might outperform relative to the other ones. All right. And that's how we performed this week. So now let's go over to look at the radar screen. What are the steps and the importance of indicators? When it comes to stock indices, obviously, I take a look at advanced decline. When it comes to individual stocks, so I have a method that I use with TradeStation using their radar screen. What's blinking here like a Christmas tree? These are my proprietary buy and sell signals, the high close doji on a daily basis, a weekly basis, and we even have it down to looking at stocks on a monthly basis right here. As we finished the month yesterday, you'll notice that most of the top sector ETFs, starting with, as we covered in the class yesterday and pretty much I think Monday and Tuesday, it was the Dow Jones Internet Trust FDN was generating a high close doji and populating a potential buy signal, which it did lock and load on yesterday. IGV is software, IWM, real estate, transportation, telecoms, the Qs, the semis, the spider. Interesting one here, bonds, TLT, which finally did generate a buy signal. We covered that in the live trading room. So I look at the different segments of the market, whether it's airlines with the jets, JETS. We look at regional banks or insurance company and regional banks. And I bring that all down. And then I have a little segment here for leveraged ETFs and volatility products like the VIX, which by the way, today, finally sub 18. So that's kind of a good new yearly or last 52-week low breakdown, by the way. We took out the lows. So we should see some more relative weakness out of the VIX, and meaning higher price structure in SPY. There was less protection and put buying as evident by the VIX going down. Looking at each top subsector, I take a look at what stocks, and I have my own list that I created in home builders, XHB. You got Home Depot, you got Best Buy, you got Williams-Sonoma, you got Whirlpool, Restoration Hardware, Leggett and Platt's a furniture guy, materials, from chemicals to certain materials like Rio, which is a Rio Tinto, which is a copper mine, a Mosaic, as you would know, is a fertilizer company, Freeport McMoran, Dow Chemical, CF Holdings, Albemarle, which is lithium component mining company, steel stocks, energy stocks, and I go on down the list every sector. So my work is fairly thorough, and I'm able to take a look at literally by a click of a mouse going up and down, and that's what I do. I scroll up and down. What's generating new end of day signals? What's generating new weekly signals? And on an intraday basis, I'm doing the same thing on a 60-minute basis on the day. What's generating new daily intraday buy signals and sell signals? The technology of TradeStation allowed me to do that. It's just I don't use their work. I use my work. I just use their technology. The indicators I use, as you can clearly see, day in and day out, I use my buy signal momentum indicator with the PPS, high close, low close doji, different time frames. I look at what the relationship of the price is between persons pivots. So when you ask what are the importance of the indicators, it's buy signal, which is momentum. And then second off, when it comes to individual stocks, there's two indicators we use that are very important to me. One is my proprietary volume indicator, because that gives me a better sense of the market in terms of momentum. But let's just say it's volume, okay? And then down below that, of all importance, would be the relative strength tool, the PMC. So when it comes to individual stocks, it's the PPS, the buy signals, that's what gives me the signal to look for a scan, a call to action, that little arrow, a buy signal. So that's the buy signal that I'm looking for to run a scan in the market. When I see that scan, then I look at the condition. Is it give a buy signal on improved volume? And then lastly, this small little indicator. And for that, I'm going to switch over to Thinkorswim, because many of you people do use Thinkorswim. And so let's go over and take a look at, let's go with Snowflake, maximize sell. And it's already up on the screen. What's on your screen? Persons pivots, PPS buy and sell signals, on balance volume, because my volume indicator is not available on Thinkorswim, but this is the tool that I use for determining strength of stocks or weakness of stocks. It's called the PMC Relative Strength Index. It's 4 colors: red, fuchsia, bright blue, dark blue. If a stock is going, if you're long a stock and it's in a sell mode and you have a relative strength weakness, here's a sell signal right there, and you're long, you're probably going to be into trouble, especially if the volume trend is moving lower. But as the stock starts to recover and you start to see the relative strength improve against the S&P 500 and the volume is improving and the trend is moving higher, it tells me that there's a better shot that the market has maybe posted a low in the market and we're starting to see improvement. So intraday basis, you use a 60-minute. For swing trading, have a daily chart in front of you. And for longer term position, we use weekly and monthly analysis. And that's pretty much the importance of your questions, I think, covered from A to Z that I read out that you wrote in. Now, at the scanning function, if you look over here, it said monthly. We ran a scan before the month ended and ran a scan as the month ended yesterday and came up with the idea, or at least had a better idea, that we were looking at a multitude of buy signals. I think so. Basically, I break down from an end of month perspective what sectors are generating monthly buy signals. And if we get a strong concentration of buy signals, and I just went up with the Russell 3000. I'm not going to give a class today on how to use Thinkorswim and how this is such a powerful tool, and especially with their scanning. But with my indicators and their scanning technology, I can break it down by industry. I can go to subsectors. And if we go with information technology, I could break it down to IT software. And you'll probably notice that if we select all software, we go with a daily scan just for today. It should be off the chart, because software application, remember we had a monthly scan of the First Trust Internet and the IGV, the software application. Today we had enormous follow through in software application stocks that gave end of day buy signals, which probably might explain, at the very least, we have exposure with Snowflake. And this is yesterday's trade was to look at the a potential breakout in Qualcomm. I don't know how many people, even though there was AMD, I said if you don't want risk with AMD's earnings, we're looking at a 135, 140 bull call spread in Qualcomm. In hindsight, I really wish I knew it was going to go to 139.94 the next day. But our technical indicators really helped to nail down the confidence of where to be and what segments of the market we could focus in on. And that's what we did there. Questions answered, asked, questions answered. Thank you very much, George. If it wasn't for you being a loyal follower, I know that you bring the best out of me. And those were some very pointed questions that I hope other people will benefit from if they're listening to this either live or on a recording basis. Another question here. Here's a question for a PUG meeting. What is the best combination of price timeframes and pivot point timeframes for swing trading? What are the indicators you rely on for buy or sell? I think we answered that question. What is the best combination of price timeframes and pivot point timeframes? Okay. I like that question, and it's kind of simple. If we're doing an intraday, meaning 1 hour signals, 5-minute signals, 15-minute signals, I use daily pivots. So to help speed the analytic or the answer up, I'll just use TradeStation real quick. So with TradeStation, you'll see here's a 15-minute chart on Ab Marley. I'm going to zoom that box up. These are the person's pivots. This is a 15-minute chart. Those are daily pivots. So you'll see this is Wednesday, and it starts here, ends there. So that's 1-day pivot. So intraday pivots for, I use an intraday pivot for a daily pivot point. 60-minute has a daily pivot point. Daily pivots. Now, why would you use a daily pivot with a daily chart? You wouldn't. What you want to probably use is the next higher time frame. So if you think logically, if you're using a daily pivot, use the next lower time frame. What's lower than end of day? Intraday. If you're using a daily chart, what's the next higher time frame? Weekly pivots. So if you use weekly pivots, let's rephrase that. If I have a weekly person's pivot up, then what's a lower time frame than weekly? Daily. So I use daily person's pivots. So I can identify what the A trend is with person's pivots. Remember, they're a leading indicator. They kind of give us an idea based on past data what the future may hold. And if the market condition is bullish, it will then project a higher high, higher low combination. When it comes to a weekly pivot chart or a weekly chart, I use monthly pivots. When it comes to a monthly chart, I use quarterly pivots. And that, I think, helps illustrate exactly how I use my work. Here's the SPY. If we maximize this cell, and I go up to study and I edit study using Thinkorswim, you'll notice that we have, I believe the quarterly has been turned. Let's turn it off. And we'll hit OK, apply, and hit OK. I have in front of you a spider chart, which is a 4-hour, half a day kind of thing. Here's a daily chart. So I can use an no one says you can't use a 60-minute chart on weekly pivots. Of course you can. If you're a swing trader, it's a very good combination to use. The person's pivots, what's really neat about the person's pivot on Thinkorswim is you'll notice that they kind of give you the anticipation of what next week or in the future, if the market closes here or higher, it's actually projecting a higher high and a higher high, maintaining an uptrend. So if any time you get a pullback in the market, you can buy against support with the understanding it should get up to the resistance. If the market breaks prior swing lows, it probably has changed and it's not going to work. So how do I target buy entries? I look to buy against the pivot, and I look to sell near resistance. And that's part of the secret to my success in the market. Two things that I never do, and I will share this with you. I generally don't like to buy resistance, and I generally don't like to sell at support. And so those are the two things that help keep me within a framework of the market. So I'm looking at price indicator. So I have two, pivots and PPS indicator. I have market condition indicator. What would be one of the better market indicators besides pivot would be volume. And so I use volume trend. If the market's going up on stronger volume, and here's a quick lesson on balance volume. Here's a market that went from the close here to the close there. The volume trend went up. The next session, it's hard to see, but it actually closed slightly lower. It's an inside bar, but it was down. Even though it shows a green candle, it just means the market opened here and closed there, and that close is still lower than the prior day's close. And that volume with OBV gets assigned from a positive to a negative, and that's where you get the trend. From that close to this close, look at the volume. The close was just minor about the same, but the volume made a newer high. It's subtle. You can't see it, but you need training. But you can clearly see that the price action here, the close is 400.2, the close here, 400.35, 15 cents better. But the whole volume, that period, went, more volume was assigned to the upside on that small little miniature upside. And that suggested that nobody wanted to sell this market and that buyers came in strongly into the marketplace. As the trend went up, you'll notice that even on downdraft days, there's literally no volume assigned to downdrafts. That means people were buying this market up. We had strong advanced decline in the SPY. We had increasing breadth. We had increasing rising volume. Therefore, if you're so-called bearish the market, you know, if you don't have the evidence to go short, then you probably shouldn't be short, okay? And so that's kind of the tools that I use to help me establish a better edge in trading in the market and giving me more concrete evidence rather than Tom, Dick, and Harry on 15 different TV financial stations, email alerts, the big crash of 1929 coming in, blah, 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 or the big recession. So somebody knows more than John Person, and that's a fact. Most times it's my wife, and she will remind me of that. But what I'm saying right now is that I really can't rely on outside influence information. I don't listen to other gurus. They don't know any more than I do. But I do listen to what the facts are presented to me in a logical, concise area. Is there more volume on up days or is there less volume on up days? And in this case, there were more volume on up days. Is the advanced decline improving? Yes. Is the person's pivots showing a higher high, higher low combination? Yes. That at the very least, if you're scared and you think that the market's going to crash, with that evidence, you're not short. You just stay disciplined and be out and don't be short the market. Wait for quality sell signals. If you're following the methodology, you should be long the market or have long exposure to the market. I hope that makes sense to everybody. Okay. So it's a good way of gauging the market. Now, when it comes to trading the SPY, again, it's an index. I can't use a relative strength tool to define the strength against the SPY of the SPY. So therefore, it's not a tool I can use. But I can use the advanced decline on indices, and I can use the relative strength, the PMC indicator, on stocks. This is Snowflake. It's a software application. And I think that's some of the important elements of the difference between what indicator would I use for stocks. Wouldn't even look at the advanced decline. But if the advanced decline is more positive in the NASDAQ, then Is Snowflake in the NASDAQ? It's a technology software application company. Absolutely. So that's how I look at different markets and different indicators. And as far as the question is for different price frames, I think we answered that with the different pivots. And it says for swing trading, and what are the indicators you rely on for buy and sell? Person's pivots to define what the trend is, and the PPS buy and sell signal, which can be found on Thinkorswim by going over here to add a study, find my name, make sure you know to get the right John Person, PPS. It's a no-nonsense indicator, and you can define whether a market's getting buy or sells based on an intraday, based on a weekly basis. Last week, Snowflake, for example, generated a buy signal, and today it had follow through. The next, I hope that's clear cut there. For any other examples about actual trades, then I would invite you to take a spin in the live trading room, and we can always show that for examples. But Snowflake, the Qs, Microsoft, Netflix, Google, Citi, let's find out. Let's see. A lot of the positions that we've been in over the last month have been numerous. If you want more details, come into the room and ask others. We also have a newsletter. We provide signals there. We also have, let's see, Amazon, Citi, Labu, which is a 3-time leveraged ETF on biotech, Newmont Mining, we're an option there, Qualcomm option, Q calls, Snowflake, AT&T, Verizon, Whirlpool long with a collar strategy because of earnings. UNG, one of the option strategies is not working right now. Baxter Labs, Dominion, which is a utility company. Intel, which I don't want to talk about. We're long. It's amazing because, well, we bought at a good price, and it's a long story, but we bought at a good price. Intel's been in a weekly buy despite the fact that it's underperformed its segments. Microsoft, Twilio, and Walgreens Boots Alliance. So as far as the trades, we track what we do, and we have an advisory service on a weekly basis, and we do a lot of our analysis live in real time in the live trading room. We have 3 rooms open all at the same time. One's an algo room, and in fact, I'll bring that into speed. Many of you are familiar with it. It generates trades such as long, shorts, SPY longs. It lists exactly not only what this trade is, when it gets in, where the stops are, profit targets, stop loss, and puts it on a little box up here, lists the trade, where it's in from, short 2 right now on crude oil, puts it up there in a box. So if you can't see it on the chart, it's put up there in writing for everybody. So it's pretty much, I don't want to say dummy proof, but that's an algo trade that we have in one room. With that said, it's been a fun month, beginning of the year. A lot of good things happen for those that do good work. The last question that I have is, I'm new to the indicators and added PMC indicator to TradeStation, but all it shows is yellow. Well, that's more of a customer service question. And with that said, that's a wrap, gang. We had a hell of a day today. We're going to probably have more excitement tomorrow with earnings coming out from, well, we already had Meta come out tonight with a spectacular 21% gain or something of that nature. Tomorrow we have Bristol Myers, Cardinal Health, Lilly, Merck in the morning. Next thing you have is in the afternoon, Amazon, Qualcomm, Apple, and then Friday is the unemployment report, the monthly unemployment report. A lot more excitement. And I think our tools are going to keep us in the right space in the right time. I thank everyone for coming. I hope I answered all your questions. Thank you for being here. And with that said, I'll see many of you traders in the live trading room tomorrow. And for those that are seeing this on video down the road, if you have any further questions that weren't answered, come give our trading room a spin and you'll see what we do in real time. Thanks, everybody. Have a great evening. Hope you had a great week with us so far. Bye for now.